The UK government are proposing more austerity, tax rises and spending cuts to deal with a fiscal black hole of around £50 billion. But more austerity, especially spending cuts to public service, risk causing more inequality, but also damage UK growth prospects in both the short and long term. Later in the video, we will look at the solution on how to make debt manageable in a way that it also improves Britain's growth prospects. Now, in September, the disastrous mini-budget of unfunded tax cuts for the wealthy caused a sell-off of UK bonds and sterling. Interest rates soared, and the Treasury and some economists use this as a fait accompli for the necessity of severe austerity. However, there are some points to bear in mind. Firstly, the market reaction to the mini-budget was not all about debt. The markets were worried about inflationary impact of such a large stimulus at a time of inflation. A fiscal black hole sounds very authoritative and very worrying. Who wouldn't want to fill in a black hole? But also, it is entirely dependent on the fiscal rule that you choose and the forecasts you accept. Governments can and do change fiscal rules. There have been several occasions in the past decade. Now, the current rule, accepted by both Labour and Conservative, is a debt to GDP rule. This has some advantages but also drawbacks. Notably, it doesn't take into account the economic cycle. In 2023, we will see higher interest rates, falling real wages, higher energy prices, very low consumer confidence. Fiscal austerity on top of this will worsen the cost of living crisis and risk an even longer and deeper recession. Forecasts of a black hole are for 3 to 5 years in the future and vary enormously depending on expectations of interest rate growth. If you have pessimistic expectations of interest rates and growth, we could easily end up with a black hole of £50 billion. But with 2% growth and 3% interest rates, this black hole falls to 12 billion. And if growth was just a little bit higher at 2.5%, this black hole becomes a surplus of 49 billion. Also, the Truss budget would have seen the deficit surge to £190 billion next year. Now it is going to be much more conservative. If you look at this graph, French borrowing has been on a more even keel. The point is, we risk going from one extreme to another. You could say that Truss and Kwarteng gave expansionary fiscal policy a bad name. Also, it is important to say the markets knew that tax cuts were politically unsustainable. It is not just about how much you borrow, but how it is used. In a cost of a living crisis, even wealthy bankers know, don't give tax cuts to the rich. It is better to spend things that might actually increase economic growth. Health, education, investment in net zero, increasing the labour supply, e.g. better childcare support. The Truss budget was very large borrowing for very little return. Long-term UK debt is not forecast to rise more than many of our competitors. The surge in rates we saw in September reflected short-term issues with Truss and Kwarteng rather than a fundamental debt problem. The danger is in trying to fix a black hole. The government caused a longer and deeper recession, which itself creates its own black hole because of rising unemployment and lower tax revenue. Now, although the case for austerity is often over-exaggerated, from a macroeconomic perspective, the case against austerity in 2022 is weaker than in 2010. In 2010, we had very low interest rates, low debt as a share of GDP. Now interest rates are rising. Total debt is more than double. So we can't say there is no constraint on government borrowing, because that isn't the case. If they do get it wrong and borrowing surges like under Truss, you will see rising interest rates, which increase the cost of borrowing. Nevertheless, we should still be wary of accepting the government view there is no alternative. Another issue is that the weakness of the UK economy is not just about demand. In fact, since 2010, it is mainly about supply and very weak productivity growth. But this weak productivity growth itself is also related to austerity and low government spending in the 2010s. To give a few quick examples, an underfunded healthcare system has seen record waiting lists and declining health. This is reflected in a fall in labour participation rates, especially amongst older workers, and this is a big constraint to growth. Another example of self-defeating austerity, government spending on free childcare is expected to fall 8% in real terms over the next 2 years. This will make it more difficult for parents to stay in the labour market. But this is a false economy at a time when declining labour market participation is a constraint to UK growth. In the past decade, the UK has also had a very poor record on investment and research and development. Compared to our competitors, it is very poor. Austerity has led to a lack of public sector investment. For example, we've seen a missed opportunity to prepare for higher gas prices, when we could have built more renewable energy capacity and reduced our dependence on imports. Now, it's easy to say austerity is bad. Who wants austerity? It's more difficult to say what are the solutions. I think at this point it's important to say something quite clearly. A fundamental issue in the UK is that for a long time we have wanted and expected very good public services, but on the cheap. Some have used the analogy, we want Northern Europe public services with American taxation. But if you want very high quality public services with low waiting lists, good investment, then tax rates do have to rise. Now the problem is, the continued austerity has given the UK the worst of both worlds. We've had rising taxes as a share of GDP because growth has been so low, but we haven't had improved public services. There is a need to raise taxes to prevent further spending cuts, but also to raise taxes in a way that maintains economic growth. The secret is to raise funds from taxes that don't have much disincentives. The Economist recently highlighted a few possibilities that I liked quite a lot. Firstly, the UK could have higher property taxes, e.g. in some of the most expensive boroughs in the UK, like Kensington and Chelsea, house prices are 8 times the national average, well over 2 million. But annual council tax is just 2,700, barely double the national average. And this exacerbates wealth inequality. A reform of property tax could raise revenue, reduce inequality, and actually help growth. It may also prevent some of the excess rise in property prices in parts of London. Also, a higher inheritance tax on household wealth would raise revenue with no disincentive to work. At the moment, there's a big transfer of wealth from those who own homes and leave it to their children. But this causes wealth inequality. We could raise revenue from this source without affecting economic growth. The biggest forecast for higher government spending is the growth in pension spending. Between 1950 and 2022, pension spending as a share of GDP rose from 2% to 8%. Still actually quite low by European standards, but Europe has been more willing to contribute higher taxes. The problem is, on the current trajectory, the triple lock pension guarantee will raise the state pension bill to an eye-watering 29% of GDP by the middle of the century. This has a huge opportunity cost. I know many pensioners with cash savings, but their problem is not money but access to a doctor. A switch from national insurance to income tax would mean that wealthy pensioners who get a very good pension would pay more tax as opposed to putting the burden on workers who have seen stagnating real wages in the past 10 years, possibly reducing incentives to stay in the labour market. So the UK does have many problems. Debt is an issue, and there does need to be a realistic policy to make debt manageable. But there is a concern that too much austerity will make the recession worse, but also impact long-term economic growth. And it's a choice the UK has to make. Do we want improved public services? And if we do, we may have to increase taxes. Well, in fact, we will have to increase taxes. We can't keep going with public services running on a thread. But if we do increase taxes, we can do it in a way that doesn't harm economic growth, but also helps to reduce wealth inequality. Hope you liked this video. Please give it a thumbs up and subscribe to Economics Help. See you soon. Cheers.